Hello, and welcome to another daily dose of insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today is Wednesday, so we take a quick look at the charts that move the week, particularly on the container trading and leasing side. However, today it's also Fed decision day. We have the Federal Reserve issuing their latest interest rate decision tonight at 8 p.m. CET or 2 p.m. Eastern time. So, of course, all eyes turn on that because the interest rate decision is also a little bit of a guidance as to what the US economy is expected to do in the eyes of the Fed. But let me quickly share my screen to give you a little bit more guidance on what I'm talking about. Here we go. So what we see here is a snapshot of our insights product. These are the trading price trends over 4 select locations. So these are 40-foot high cube cargo worthy containers in Antwerp, Chicago, Houston, and Shanghai. So a little bit all over the globe from Northeast Asia across Europe and the US. And what you see this picture that we've seen over the past couple of months already. Of course, Shanghai has decoupled and is still decoupled from the rest of the world. However, that downwards price trajectory that we've seen over the past couple of weeks seems to have turned the corner. We do see a price recovery in Shanghai for cargo worthy containers a little bit towards the end of the typical peak season. This goes a little bit against what we would expect, especially if we also compare this with freight rates. But there might also be very local considerations and trends at play. And of course, we must not forget there's still a pretty big China-Russia trade that doesn't show up in freight rate indices on the Transpacific and Shanghai Europe trade. And then we look at leasing price trends, and what we see here. Let this load real quick. We see also 40-foot high cube units, but here only one stretch, so Shanghai to Houston, 2 of the locations that we've seen before. You see here that the price has dropped significantly, also mirroring a little bit the narrowing of the price delta between the 2 locations. And of course, now it will be interesting to see whether this drop persists a little bit in line with the expectation that Transpacific volumes will be muted or at least less strong over the next couple of months, because there was a strong pulling forward of orders ahead of the typical peak season. So that would indicate that these prices will remain subdued. On the other hand, there might also be a recovery here if the Shanghai container prices do indeed make a sustainable turn of the corner and recover again, because then this leasing rate will have to mirror again the price gap between the 2 locations. So that's it from us for today. Have a fantastic start into the week. And if you want to learn more or read more, we've just issued a customer advisory about the situation at the US East Coast ports. Also put the link into the comments, and happy to hear from you and your views on how this will impact specifically US container prices. Now, take care and see you on Friday.